Recording. Recording. So how many participants? 33. 33 participants, right? How many online participants? 5. 1 participant online. Average class participation is how much? Out of 33, 1/3. 10, 20 around. That means we can start, right? Can we start? Yes, right. Okay, we start and again welcome to the year 2 semester 1 business finance module, right? So hope online students also can hear me. Can you hear me? Can you all hear me, online students? Can you respond? Okay, hope you can hear me, online student. Since this is the first lecture, so then I will going through by myself first. So I'm Mr. Chandni Paudavanthan, working attached to the Department of Accountancy and Management of Sub-Campus, permanent lecturer here, right? Other than that one, I just want to identify yourself. Can you, since you are coming from the exception batch, can you tell me your names as well as the exception category?
I'm Charlie.
Charlie. Corporate level, completed corporate level and have the exemption. Rebecca. Corporate level. Sumudu. Business level. Geneva. Chalima. Business level. Business level. AG exemption. Hansika. Hansana. AG exemptions. That means mostly AG, business level and corporate level exemptions, right? So if you want to contact me, my biodata is given here, right? So this is my working mobile as well as personal number. If you want to contact me at any time regarding the business finance subject module questions and the inquiries, you can reach me via this mobile as well as the email number. So this is business finance course module, right? So how many credits? How many credits? You know there are core subjects as well as elective subject in this degree program. This is a core subject. So that means since you are coming from the various background, you are getting the exemption for several subjects, right? For you to have a separate subject and business level students, they might have a separate exemption subjects, and 80 levels, they have separate exemption subject, right? Anyway, this is your first level, right? First level or second level? Second level. All you complete the first level. As I got to know that you have some subjects from the first level remaining, and some of the students are doing the first level examination in these days. Am I correct? No, not exams, but you have some first level exams or the subjects. Audit or something? No. That means you have fully covered the level 1, right? Okay. So then this is your level 2 as well as second year first semester module, business finance, right? That means basically we are discussing about the financial management concepts here. Actually, this is a core subject which has a how many credits? 3 credits. So that means it is creating an impact for your GPA. Okay. So as you all know, if you go through your handbook, so this is the main 8 pillars coming from the business honors applied accounting degree program. So there are 8 pillars. Reporting, that means normally accounting, financial reporting, corporate reporting, and accounting in contemporary issues. That is, those subjects are coming from the reporting category. And then assurance, ethics, and risk management. That means audit, internal controls, and then the corporate governance subjects are coming under this pillar. So actually our pillar is coming from the financial analysis. Our subject is coming from the financial analysis. If we go through the financial analysis, this is how your syllabus has been comprises with in line with the each years as well as in line with these 8 pillars, right? This side years, that means first year in the reporting, first semester you have the financial accounting subject, and then first year, second semester from the reporting area you have the cost and management accounting subject. So this is how your degree programs has been comprised with these subjects. Just I want to explain my subject, business finance, it is coming from the financial analysis discipline. In the first year, first semester, since we want to have a business finance knowledge, we are improving the students via the financial mathematics. So therefore, the initial subject from the financial analysis is the first year, first semester financial mathematics. Hope you have completed that one or have got the exemptions. Exemptions. So the first year, second semester, as an extension, again, we have business statistics and forecasting, right? In the financial analysis. Hope you have done that one or exemptions. Done, right? So Ms. Sachini conducted the statistics and forecasting subject. It is highly impacting for our subject also, right? That is why we are growing our students in this financial analysis pillar with the financial mathematics and then financial statistics and then business finance. What you need to take from this is to conduct it, to go with the business finance subject, you should basically have the business mathematics subject knowledge as well as the statistical knowledge up to a certain extent. As an extension of the financial analysis subject, again, for the first semester, you have corporate finance management, right? Corporate financial management, which is similar to the strategic level CRM subject. And regarding the subject assignments and all the things, group assignments and all the things, normally you are doing group assignments. Have you got that, right? Good. So then regarding my subject, CA component is 40% and then end semester 60%, right? End semester 60% means final exam, you have a paper. It's a closed book paper, not an open book paper. So therefore, you have to be ready with the formulas and all the things. Closed book examination, and then it is having a 60% marks out of your 100%. Before going to the exam, you can earn the 40% mark from the continuous assignment, and then that continuous assignment component applies with the 40% marks, and then again it is coming under the individual quiz number 1 on 5th week, as well as individual quiz number 2 on 10th week again, which carries 10 and 10 marks. Altogether for the group for the quizzes, you have to earn 20 marks. Regarding the group assignments, have you conducted the group assignments? Right. So then, regarding the group assignments, I will release the information on 3rd week. So then you have to complete on the 14th week, which carries group report carries 10 marks, as well as group presentation. We have the time, we have a presentation, or else we can record the presentations and have it on the online mode without disturbing the other lecture weeks. So then normally we are having the presentations or the recording on 14th or 15th week again, which carries 10 marks for the out of the 100. The group presentation, then group was 20 marks, and then individual was 20 marks. Clear? Is this clear? Okay. So this is the session plan. So all the details are available in LMS. If you want to go through the detailed versions, you can refer the LMS. So this is the presentation I have just prepared to explain some important concepts. We have 11 lessons starting from the financial management, introduction to financial management, and then financial markets or financial system in Sri Lanka, and then time value of money. Have you heard time value of money? Yes. In which subject? In which subject? Management accounting. Management accounting. You have the management accounting? Your syllabuses. Exemptions at corporate level or the chartered syllabus. Other than that one, good. In mathematics subject, we are discussing about the time value of money. Anyway, since you not have a set for that examination, we'll discuss the time value of money lesson also. But sometimes I'm not discussing the time value of money lesson because repetition is there. In this batch, I will conduct the time value of money as well. So then 3rd lesson is the time value of money. Again, you can identify, we need mathematical concepts, right? We need statistic concept to go with the financial management subject or business finance subject. 4th lesson, very interesting, share valuation and then the bond valuation. And again, for the share valuation and bond valuation also, we need time value of money. The sound concepts in the financial management or the business finance is a time value of money. We have to consider the time value of money. Then we'll go to the risk and return lesson. Again, calculating the portfolio analysis, calculating the standard deviation, variance analysis. What happens? Again, you need which knowledge? Statistical knowledge, right? Statistics knowledge. Next lesson is identifying the cost of capital. Sometimes you might heard that one in business level or the AT syllabus, weighted average cost of capital, KD, KE, and all the things, right? Cost of capital lessons covers the entire individual cost to the weighted average cost. Then capital budgeting. Costing, you might heard the NPV, IRR calculations, then the payback period, all the calculations again coming under the capital budgeting or the investment decision. And then we have to identify the capital structure decision. Again, structure of the companies, debt and equity portions and all the things. And then working capital management. Lastly, we have to go with the dividend policy and then the derivatives, right? Dividend policy and the derivatives and then the past paper discussion. So actually, we have the quiz number 2 in the 10th week And then quiz number 1 in 4th or 5th week covering these 3 components here. And then from the second quiz, we are covering all the components that fits until the 8th lesson, right? So this is the lesson plan. You can have a printout and then copy and paste in your walls in front of your beds, and then have the proper plan under this semester, right? Not under the financial management subject. You should have a proper plan for this semester, because now in this semester onwards you are going to face for the 6 subjects. Am I correct? No. How many subjects you have for this semester? 4 subjects. What are the 4 subjects? HR, finance, management, MIS. Only 4 subjects. As per the calendar also, I only saw the 4 subjects. Srilanka sir is doing the corporate reporting, financial reporting, and then the Ashin sir is doing the MIS, and then HR is Professor Aruna, and then business finance, Aruna myself. That means you do not have the communication and what is the other subject? Internal business process, internal. That means you all exempt from those 2 subjects. Audit as well as the other one, communication. Annual that's what I asked. Anyhow, someone informed me they might have exams or lectures on those 2 subjects. You know, to tell. Then how you are conducting that lectures? Online. Then business communication exempted. No. That is what the case is. Okay, so then recommended readings. So I hope you all are preparing the lecture materials as well as the additional reading as well. Right? So you all are adults. So then rather than telling one by one, if you have any clarification, what you can do is you can directly meet me, inquire me. Again, if you need further readings, you can refer this lecture material. So these are the recommended readings. I also take some concepts from these recommended readings, right? But don't worry. One by one until the chapter number 12, I will upload the book chapter to the LMS from the extracted from this recommended reading. So therefore, you don't need to buy this one. Buy this financial management IM Foundation edition, 11th edition, as well as the other one, financial management book, because IM Foundation, the recommended reading book chapters will be uploaded to the LMS one by one. Yes, that is the introduction for the chapter. That means business finance module. If you have any question on this module, basic initial questions from this module, you can ask me. Completed CA component, that is most important part for you all. And then the session plan, and then subjects, the lessons coming under the basic subject, and then the plan is discussed. Any question? Questions? No. Who is the best representative? You? Sumudu. Sumudu, Rebecca, Gina, Janima, Ishara. Your name Hansika, right? Hansa. Hansana. Sorry. What is your name? Isha. Alright, so hope others will not come for the lectures. Okay. Can you go to the LMS page, please? Business finance. All the details that I have discussed have been uploaded to the LMS. So the module number business finance, name is business finance. Even the introduction session presentation also available in the LMS. If you want, you can reach me via this email as well as mobile number. Course outline is given there. I just leave the course outline. So these are the course outline, the contents, right? Topics that we have to discuss. This is what I have explained by the session plan. If you want to have an in-detail analysis regarding your course content, you can refer this session, the course content material. It includes whatever the topic, right? So, example for the first topic, what are the actual things we have to discuss, right? So then, if you need a comprehensive analysis regarding your course content, you can go through this document. Each and every component, each and every lessons should cover these sub-aspects or the subtopics within that lesson. Those are mentioned in this course curriculum or the course content document. Even the assignment structures also given there. Again, I just want to highlight this one also. So face-to-face contact time. So we have only 45 hours, right? 45 hours means during as your syllabus, as your other time plan. So within a 10 weeks, I have to cover 11 lessons. That means we have to conduct 15 sessions. Within 10 weeks, we have to conduct the 15 sessions. That is why I have been allocated morning session as well as the evening session 3 to 6. It doesn't have because I have visiting lecture CA. That's why. Anyway, you have the morning 8 to 11 session as well as 3 to 6 session for the financial management or the business finance subject. Okay. Anyhow, we have only 45 hours, right? But so you know this is and this one as well as cooperative reporting is the most critical subject in this semester. Because corporate reporting or the financial reporting also discussing with some the calculations, double entries and consolidations and standards. Meanwhile, financial management also having some sort of calculation. So therefore, you have to spend how many times? Self-directed learning expected 35 hours. And then Moodle activities, studying through the Moodle activities 30 hours. And then assessment, review and revision, that is 40 hours. Forget about the assessment. At least you have to work on 65 hours by yourself to have a better understanding regarding the financial or the business finance subject, right? But I want to highlight is spending 45 hours with me is not enough to have a proper grade. So you have to work by yourself based on the tutorial, do the tutorials and then read it, do the recommended readings, practice the questions. So therefore, work on 65 hours by yourself. Okay, that is necessary, right? Yes, SLP mapping. As I told you, so the book chapter is available. This is the recommended readings before coming to the lecture. If you want, if you have the time, you can read the recommended reading. You all are working in somewhere else. You all are working. You are working. Yes, okay.
You put it many themselves.
What's your name?
Charlie.
Chalit. Chalit. They will know. They will know. Angular. KPMG. Supervisor. Sri Lankan Airlines. What is that? Sri Lanka. That means you do not have a time to self-study, right? Have done. So then how you are doing the chartered exams? So your plan is to have this degree and the exemptions. Can't do it. Can't do it. Exemption to exemption. What's your plan, Charit? Why you are doing this degree? No exceptions, right? So exemption to exemptions now. That means you have to do the chartered, the electric and then degree. How will you set for the January exams? Chartered corporate level exams? No. Corporate level exams. Others? You all are doing chartered as well, right? Doing chartered as well as doing CA. Sorry, the SAP degree. That means you should have it. How many of you are planning to do the June exams, chartered exams? Study level. Corporate level, one subject.
Subject.
SAT. Previous syllabus, you did the one subject in strategic level. That means you are doing strategic level, remaining subject in June. No plan.
Yes, sir.
I was unable to ask you, exemption category. Business level. You are targeting for the remaining two subjects in business level or corporate level. Corporate. June. That means you have the classes as well. Right? You are participating for the classes as well. That means meanwhile you are doing this degree program. Definitely you don't have 65 hours to do. So this is the chapter. So therefore no need to purchase the IM Pandey's the financial management 11th edition. You can just refer the additional readings by referring this. And the tutorials are there. Once I complete the lecture, please go through the tutorials and do the tutorials. If the time permits, only I am doing the tutorials and lectures. Otherwise, I have given the tutorials for you to refer as well as to calculate. Hope you have bring the tutorial, the printouts of the lecture material. I have uploaded this one on Wednesday. How many of you bring the printouts? Do only please. Okay. So we'll start the first lesson, right? Introduction to business finance or financial management. Very good. You have exams. I know it's a little bit hard, right? So you all are doing your pathway started as well as you are comparatively doing the certificate and then meanwhile you are doing the job as well. So therefore these three lines are you can't actually manage the time. Right? If you are not properly managing the times, you can't reach this fourth ladder. So therefore, what you can do is like regarding the sub-campus degree program, you can maximally give the effort within these 3 hours. So then spend these 3 hours effectively and efficiently. Otherwise, you have to bear syllabus, CA syllabus as well as sub-syllabus. It will be hard in your job role as well. So therefore, please bring the lecture materials and then write down the important points and then spend me these 3 hours effectively. Right? So then you can have the A class for this subject. Nothing to worry about 65 hours, even you do not have a time. So start with the lesson, right? Introduction to the financial management. So just I have given there a picture including some several components, right? In the middle of this picture, we have Sumudu, right? Sumudu, CFO of the water board, right? Chief Financial Officer of the water board. She needs what? She needs money, right? To run the daily operations, to make the investment activities, she needs money, right? So then I have given there some sort of activities in my right hand side, that's left hand side, and then right hand side I have given some sort of the financial organizations, right? So in between these two parties, left and right, Sumudu is placed here, right? Sumudu is placed here. So I just asking you, map these activities with these companies. Please name these activities first in the right hand side and then please name these activities or the institute in this side and try to create a mapping between via the Sumudu in between these organizations using arrows. Hope it is clear what I have said to you. Are you clear? Right? So this is Sumudu, right? This is Sumudu, financial officer, CFO. Online students, can you see my screen? Chief Financial Officer, Sumudu. And this side you can see there are 3 pictures. First picture, right? Second and third. This side you have some sort of institutes, 2, 3 and 4. First, name these 3 things and then name these 4 things and then identify how Sumudu as a CFO link with these activities, right? Again, just to simplify, these are inside activities, inside parties, and this side, these are outsiders. Outside parties. Just try to map these activities with this institute via Sumudu. Why she need these companies? Why she have to engage with these activities? These are company. These are the student, right? Are you the coordinator? Okay, do it. And come front. What's your name? What's your name? Shanit. Shaki. Shaki. MF. I think shall stay. But its topic is now okay. So. Okay. So we have placed Sumudu here as a CFO. What is the first one? This is business operations. What are the business operations? The first activity, it is business operations. Business operations. What are the business operations? Business operations. Payment for, collecting funds from the debtors. What else? Payment for the creditors. And then if it is debtors means it is linked with the sales activities. And if it is creditors means it is linked with the purchase, and then creditors, debtors, and then inventories, handling inventories, cost of goods sold, and then we might have the cash management or cash activities. Basic 4 activities. Right? So while the finance manager or the finance team is engaged with this business operations, what they are doing is they can have the income and expenses. They can earn income and expenses. They have to utilize money on expenses. They have to expense. By calculating these income and expenses, what is the ultimate objective of the finance manager or the accountant is to declare the profit of the company for the year. Profit. They have calculated profit or loss. If they have loss, we can't do nothing. We can't go the investments. But if they have profit, right? If they have profit, what they can do is they have 2 options: sharing the dividends, and then keep retained earnings. Remaining part is going as a retained earnings, right? So after 2-3 years, if they have accumulated these retained earnings, what they can do, they can go for the investments. They can go for the investment. So then first activity, business operations, and then second activity, income and expenses and calculating the profit and loss for the year. And third activity, they can go with the investments. Investments. Right. To run these entire activities, right? to run these entire activities, especially the operations, and then when they are engaged with handling and expenses, as well as when they are handling these investment, right, payment of the dividend and all the things, the Sumudu, the finance manager need funds, right? Finance manager need funds. Why she need funds, right? She need funds. She need funds for what, right? To the run of the business operations. She need funds to run business operations. Business operations and then investments. Investment. This is the inside of the business. Right. To run these business activities, she needs funds. So therefore, she has to engage with these outside parties. Outside parties. The first one, if she need money, what she can do? She can have the OD facilities, or she can have the short-term borrowings or the long-term borrowings. Long-term borrowings, short-term as well as the long-term borrowings. If she need to acquire the inventory, she need a vehicle, right? But she do not have funds. So therefore, what she can do is she can have the leasing facility, right? Leasing facility. Other than that one, she can obtain some insurance facilities as well as the leasing facilities in line with these insurance companies. Right? These are insurance companies. And then some financial institutes. Financial institutes. Financial institutes. First one is Colombo Stock Exchange, as we all know, right? Secondary market platform, right? Secondary market platform, Colombo Stock Exchange. If she want to go over with the huge fund required investment, right? If the retained earnings is not permitted, what she can do is she can issue the ordinary shares. She can issue the ordinary shares. She can go with the preference shares, as well as she can go with some bonds issues. Right? Where these are happening? These are happening in the Colombo Stock Exchange. If you can't identify the preference shares, just remember she can issue the ordinary shares and collect funds. Right? She can collect the funds by issuing ordinary shares. Meanwhile, right? Meanwhile, if she has funds, extra funds, what she can do is she can acquire another company's shares. Right? Is that possible? That is also possible. If she have extra funds, what she can do is she can go to the Colombo Stock Exchange and then acquire another company's equity, or else acquire another company's bond. In that sense, to manage these funds, to utilize these extra funds in the some organizations, as well as to gather the funds, she have to connect with this Colombo Stock Exchange, that is CSC. CSC. With two purposes. The first purpose is to gather the funds, right? Gather funds. And the other reason is other reason is for the investments. Investments. So all these are outside parties. Outsiders. Outside parties. Right. So therefore, as a CFO, a head of finance, Sumudu have to deal with these outside parties in acquiring funds, as well as to manage these internal activities to utilize that funds in the business operations, right? So this is what we call as what the entire picture give us the idea regarding what? Regarding the, what is this? This is finance, right? This is finance. If we identify the accounting here, calculating profit and loss as per the standards, right? So here the accounting function involves. Accounting function involves. So therefore we identify finance is a broader concept than the accounting, right? So which in line with the managing funds, right? Managing funds as well as acquiring the funds needed, right? What is mean by finance? Managing the funds, right? First one is finance manager, or the within the finance, we have to manage the finance. That's the first one. And then or else acquire the needed funds. Acquire the needed funds, right? Finance deal with the acquiring needed funds as well as effective and efficient utilization of that acquired funds in the business operations or the investments. Are you clear on finance? Right. So this is the entire picture of the finance. If you want, you can draw this one. Or else if you want, you can have a screenshot of this one. Better to write down this one. With the name of Sumudu CA. Okay. Hope done. So with that, we'll go to the introduction of the business finance subject. First lesson. Actually, these are the things we have to discuss. Basic goals of the financial management, role of the financial manager, and key financial decisions, and then agency theory, and then the stakeholder theory in the financial management. So this is what we have discussed. So then what is finance? Already we identified what is meant by the finance. Finance is the process of how the money is managed, right? How the managing funds or how money is managed, as well as the actual process of acquiring needed funds, right? How money can be managed as well as how we can acquire the needed funds is called as what? The broader finance concept. So then, accordingly, we have activities, some sort of activities engaged with the financial management. What are the activities? We discuss these things. Banking activities, we have to engage with the banks to do the banking activities, short-term loans as well as the short-term loans or short-term borrowings, and then long-term borrowings. And then if you want to have the OD facilities, you have to go with the banking activities, leverage and credit. That means you have to go with the equity financing as well as the debt financing. Equity financing and debt financing when we are deciding the capital structure. And then definitely you have to do the investments in finance, right? It might be investment in financial assets, FA, or it might be investment in the non-current assets, or else real assets. So all these are happening in where? In the financial market. We can divide the financial markets within the several categories. As we know, primary market and secondary market. Primary and secondary market. And then broadly, money market and capital market. Money market and then capital market. Money market, capital market. So when we are dealing with these financial activities, especially the financial managers within the PLCs, right? PLCs, they have to deal with the financial instrument. Financial instrument means what? To the one party, right? To the one party, it is a financial asset. To the one party, it is financial assets. To other party, it is a financial liability. Financial liability, right? The examples, don't worry, we have. So the contract in between these two parties where the create a financial assets to the one party and the financial liability for the other parties, we call it as a financial instrument, right? Financial instrument. Don't worry, we have a lesson, full lesson for the discussion of these financial instruments. For example, we identify ordinary shares. Ordinary shares and then preference shares, bonds. Those are financial instruments. Other than that one, we have subs, we have forward, we have futures, and then likewise options to deal with this. Derivatives, all are coming under the derivative categories, all are coming under the financial instrument. Don't worry, we have a one lesson. Last lesson is regarding the derivatives. Just to simply identify that, right? So financial instrument means it's a contract between two parties where the contract creates a financial assets to one party and it is created a financial liability for the other party. For example, here, ordinary share, it's a financial assets for the ordinary shareholder, right? Ordinary shareholder. Other side, company, it's a financial obligation. It's a financial liability. Why? Even they have obtained funds via this issuing ordinary shares, At the liquidation, company have to settle this one. So therefore it is what? It's a financial liability. But for the ordinary shareholder, always it is what? Financial assets. Whatever the time he want to sell this one, it can sell in the Colombo Stock Exchange and collect the funds. Okay, so these are some of the financial activities, banking activities, leverage and credit activities, and then investment activities, investment in financial assets or investment in real assets, and then financial markets and financial instruments. Okay. What is your decision? Finance is art or the science? Art or science? How do you think? Art or science? Start. Both. Answer one. Hansika. Hansana. Answer. Art or science? Finance is art or science? Science, okay. Aki. Aki, right? Shaki. Shaki. Art or science? Science. That is the debate. Science. 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 Okay. Chara, why did you tell that both? Any specific reason? Sarita, calculation. Ah, good. Right. Science means, right, how the finance becomes science. We have statistical models. We have statistical as well as mathematical models. Mathematical models. Model applications in finance. Applications in finance. Examples. Especially we have to calculate standard deviation. We have to identify the variance, coefficient of variations, right? So these are identities needed to be calculated, risk and return. Risk and return. Especially the average value calculation, average. Average value calculations. Not only those things, we have to identify. We have specific models, capital asset pricing model, right? Valuation. Valuation, for the valuation, we have a lot of methods, especially even with the investment appraisals. Investment appraisals, we have to calculate IRR, NPV, right? All are coming from statistical as well as mathematical models, investments, right? Here investments. So therefore, obviously, we all can think that finance is a science. Yes, it is correct. Right, it is correct. But the thing is, it's becoming an art as well. Even we have a financial knowledge, even we have obtained the answers via the financial, the mathematical or the statistical model, when we are making the decisions, right? Decision making in finance. Right? Decision making in finance. decision making in finance, it's helping to become an art as well, right? Even we have obtained the number here, even for example, we'll take, you all are familiar with NPV and IRR, right? So if the project gives us a positive NPV, what is your decision? What is your decision? If the NPV is positive, you are normally going with that investment, right? You are accepting that investment. But the thing is, if the positive NPV, if the respective project generate positive NPV, but it is investment harmful project, right? It is harming for the investment. So it is a damage for the investment. It is damage for the environment. Are you going to make that investment as a rational CFO? No. What's the reason is, once you make that investments, other way around, you are taking the pressure from the stakeholder. Sometimes it might be causing for what? To reduce your market price of a share, right? Market price of the share, because demand for the share might be going down when they are making some harmful project to the environment. So therefore, in having these financial decisions, in making the financial decisions, right? So the investor have to consider this one as well. Other than that one, when they are making the investments, actually, they have to use investor sentiment. Investor sentiment. As well as investor behavior, right? In risk and return, sometimes even it's generating a high return, right? Even it is generating high return with the low risk. Some investors, based on their behavior, you might heard that one. There are some investors who are not willing to take the risk. We call them as the risk-averse investors. They are risk-averse. So then there are some investors who always like to have a risk. Risk takers, right? Likewise, there are some risk averse as well as risk takers. We call those things in deeply coming under the investment behavior, right? Investors behavior or investment behavior, right? Those are actually the sentiment or psychological concepts which in line with or else which make finance as an art, right? So then finance also becoming an art, we call then finance is art or science, the most common term for this type of question, that is both, right? Is both. Are you clear on this? Good. Okay. So my handwriting are not that much good. So therefore, what you can do is when I'm explaining, you can write. Otherwise, later on, when you are identifying the letters, that might be difficult to understand. So then in the corporate side, financial reporting, you have the previous level 1 subject. No, right? That's the exemption. So that means you are in this time onwards, you are going to have the financial reporting. The first time. Thank you. Yes. This is what we have discussed. Managing funds, you can read. We'll come to the basic areas in finance, right? There are how many basic areas in finance? There are 7 basic areas in finance, right? What these 7 basic areas is starting from, right? Corporate finance, investments, and then financial institutes, and international finance, public finance, entrepreneurial finance, and then the personal finance, right? Before moving to the discussion of these things, I just ask you, write down a short note on these 7 areas and have a by on your idea, right? So then I will go through one by one. Discuss with your friends, make it as a pairs, and then do that activity. Discuss, identify at least 3 lines regarding these 7 basic areas, right? Then I will explain. Okay. Just search and write it down. Do it as a pair work. The GPT. So then that is very good. Good. Need to discuss it. Okay. You are going to have an idea from ChatGPT now. Okay, we'll go to the first one. That is one, investments. Right? Investments. What is mean by an investment? Investment. Do we have investment? Yes, we have investment. What is the basic investment we have? You are doing a degree program. Right? Is that an investment? Yes, it is an investment. So when you are doing a degree program, you have already hand over or paid some sort of money to the sub-campus. Oh, it might pull 175 per semester. Now, how much? Exemption based on then? How much? Per semester level? 69,000. 69,000. First level. Second level? I feel others are paying that 175. Anyway, so you are sacrificing what? Your current funds, right? Why you are sacrificing current funds? To have a degree, right? While you are having a degree, what happened? You can face for the next interview. You might have a next promotion. You can go for the next, or else you can make your job as a permanent one. If you are on the contract basis or the intern duration. So that means it generates what? It generated future benefits. Right? Future benefits. For have the future benefits, what you are doing is you are currently committing your funds. Am I correct? Yes. That means what is mean by the investment? Investment is a committing current funds for a long run to have a future benefits, right? Committing current funds, investors current funds in long run to have a future benefits. We call it as a what? Investment. Right? So when we are making investment, right, we can make an investment in financial assets as well as the real assets. What is meant by real assets as well as financial assets? Real assets. If you want to have an investment, what you can do? You can acquire a land. No issues. You have a 1 million, you can acquire a land, right? And then if you want, you can acquire a building, right? What is it? Real assets. Real assets means it has a physical existence, right? The real assets are physically existing. Normally categorized under the balance sheet in where? In the non-current assets. Non-current assets. Acquiring building, acquiring land, acquiring motor vehicle, equipment, furniture, or computer, all are coming under the real assets. Right? Real assets. Other one, as an investor, you can have the investment on financial assets as well. What are the financial assets? Financial assets. You can acquire financial assets. The first category is it doesn't have a physical existence, right? Whereas real assets, they do have a physical existence. Financial assets, they don't have a physical existence, right? If it is not having a physical existence, what is the main character of the financial assets? It generates or it has a capacity to generate funds, to generate cash, or else to convert that financial assets into a cash. It has that capacity. What are the examples? Examples. If you have that assets, you have a capacity to convert that asset into a cash. What sort of financial assets? Very good. Shares. If you have a bond, if you have a preference share, that's a financial asset, right? What you can do? Yes, shares, ordinary shares, ordinary share issues. Share issue. That means if you have a share, right? Share is what? Share is a financial assets, right? If you have a share, what you can do? You can convert that asset into a cash, right? If you have bonds, you can have the capacity to convert that bonds into the cash. We call them as what? Financial assets. Financial assets, right? That's how you can make the investment in financial asset for a business. Creditors, debtors also becoming a financial assets, but we'll discuss those broader concepts in detail when it comes to the respective lessons. So then allocating funds to acquire the assets on behalf of to have the future return or the benefit, we call them as a financial assets. Actually, the investment can be made in financial assets as well as the physical assets or the real assets. Real assets. Real assets, financial assets, and real assets. Physical assets. Especially when we make the financial investments, when we make the investment decision, you have to consider two concepts: risk versus return. Risk versus return. This is our fourth lesson, to have a risk and return concepts when we are making the investment, right? So therefore, you have to understand the basic idea. You might have now idea regarding the basic idea regarding the investment. What is mean by an investment? You can have a break and come for a 15 minutes and then we'll discuss the financial institutes. Okay? You can come at 9:55 or in between 9:55 to 9:10. Huh? How many banks in Sri Lanka? How many finance companies and how many insurance companies? Right. We have the SCD code. You can give the answers. People I will find your interesting. I'm waiting for that piano. It is 20 now, at least 26 or so. So you can adjust this one according to your wish. You can put it as a 27 or 26. Okay. So how many banks in Sri Lanka? How many banks? Banks can be actually divided into two. Licensed commercial banks as well as licensed specialized bank. Commercial banks 24, and then commercial specialized bank actually as per the central bank that is 6, right? Altogether we have 30 banks in Sri Lanka. 30. Insurance companies, how many? 29 insurance companies, right? 29 insurance companies. Finance companies, how many? Akif. 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 Shahid. Shahid. How many finance companies? 30.
33.
33. 33 or 30? 33. So tell me, what are the main role of these organizations? What they are doing? Yes. Financial institutes, right? Finance companies and then insurance companies, especially brokerage companies and then banks. Those are categorized under the financial institutes, right? So again, financial institutes give us the funds, right? Give the companies or they give the finance manager, give the small organizations funds. They are providing funds, right? How they provide the funds? Can they print money and provide the funds? No, they can't. So therefore, what they are doing is they are collecting funds from the savers first. Right? They are collecting funds from the savers first. And then they keep their money and then that funds is giving to whom? To the borrowers. Right? Collecting funds from the savers and then giving that funds to whom? To the borrowers. Right? So within these two parties, lenders as well as the borrowers. Lenders means savers. Right? Savers, they have we call them as excess money units. Right? They have excess money units. Right? Lenders, excess money units. Savers, excess money units. Since they have extra money, they deposit money in the banks or the financial institutes or the insurance companies. So the parties who need funds, they come to bank and they obtain these funds, right? They call as borrowers. They do not have funds, so therefore we call them as again deficit money units, right? Deficit money units and then the excess money units. Within the excess money units, right? Excess money units, they deposit and then save lenders, they obtain these funds. Within these two parties, financial institute play a which role? Intermediary role, right? Intermediary role, right? So their role is what? They are coordinating these two parties, excess money units as well as deficit money units. So therefore, the role of financial institute is one, act as an intermediary parties in between the excess money units and then deficit money units. Thereby, they collected funds from the excess money units and then pass that funds to the deficit money units. Okay. So this is what the description regarding the financial institutes. Work hand in hand within the financial market. Obviously, all the financial institutes are categorized under the financial markets. And then there are the intermediaries that help to transfer the funds in between business and savers. That means working as a broker or agent for the trade. You have been given the example for the financial institutes as we previously identified insurance companies, finance companies, commercial banks, and then the commercial as well as specialized bank, and then you can take the brokerage companies as an example also. Okay, next one, international finance. Very simple. International finance, financial activities in between two or more countries, right? Very simple. Finance, one person is missing, right? Okay. International finance means what again? If we have the financial activities in between two or more countries, it is coming under the international finance, right? Sometimes companies might have the financial project in another countries, right? Sometimes companies have the new acquisition in another country, right? So, for example, port city, what is it? That is a foreign direct investment. Again, foreign direct investment coming from which country? Port city? China. So that means for the China as well as Sri Lanka, that is the international financial activities. The earnings coming from the port cities goes to directly to the China. Part of that money is coming for the Sri Lanka as a the the higher agreements or likewise, right? The lease or higher agreement, right? So likewise, if the companies or the or if the companies or countries dealing with financial activities or monitoring or engaged with the financial activities more than one country or the multidisciplinary countries, right? We call them as a one international finance. International finance, actually, when we are making the international finance, you have to be concerned on which one. Yes, when the company is engaging with the foreign direct investments or the investments, foreign investments, and then the transactions, they have to concern on. You have a standard also in case 23. What is it? 23 or 28? Yes. What is it? Exchange rate. Like why? When we are entering to the agreements, exchange rate is one thing, and then when we are closing, when we are coming to the payments, the exchange rate might be a different thing. So therefore, when the finance managers are engaging with these activities, they have to concern on this exchange rate as well, especially. So you might heard that one spot rate and all the things coming under the LKS, the foreign currency LKS. So then all the things we have to adjust within the company. If there is a change, we call them as a foreign the exchange rate risk. Why? When entering to the agreement with the America or whatever the country, the dollar rate is 320, but when we are making the payment, that might be going to the 400 and likewise. If that is so, we have to face for a loss. So therefore, finance manager, when he is entering to the international transaction, they have to highly concern on this exchange rate risk. Okay. So then international finance, study of monetary interaction between two or more countries is called by the corporations. We call them as international financial activities. Such companies need to consider more foreign exchange rate, actually differencing interest rate from the country to country, and then inflation rate, and then foreign investment interaction and the government. I was unable to explain the inflation rate. So what is the importance of the inflation rate here? Inflation rate, it's obvious. In the international transaction, we have to concern on the exchange rate risk. How the inflation rate is impacting? Inflation rate of that country. Sometime when you are making the investment in the other countries, that country might have what? Inflation. Right? That country might have inflation, by the other way around, Sri Lanka or the mother country also might have the inflation. If we are making the project on the inflated country, what happens? You have to bear a huge cost, right? So you have to bear huge expenses. That might be sometimes advantage for the mother country or the country who are making the investment. Therefore, you have to concern as the finance manager, they have to concern on the inflation rate of that company, exchange rate, and then policies, rules and regulation impacted by that country for this kind of investment. right? When China is making the port city, right? So they have to concern on Sri Lankan rules and regulations, right? Since we are a small country, they don't need to worry about that one. But if we are making an investment in China or the India, we have to concern on their government policies and likewise so. So otherwise, what happen? Once we made the investment, we might lose the investment based on their rules and regulations. Even we are expecting 25 profit, based on the rules and regulations, we can't obtain 25, we can only have 5%. So therefore, when the finance manager, especially the corporations, engage with these international business activities, they have to concern on the policies, inflation rate, exchange rate, and all the things. Right. One of the most significant complications of the international finance is, as we explained, that is the foreign exchange rate risk. Very simple, last one. Public finance. Public finance means what? Utilizing financial activities by the government for the betterment of the nation, right? Betterment of the general public. We call that one as what? General or the public finance, right? How can the government collect the funds? How government collect the funds? Taxes, what else? Who is the authority to collect the funds? Yes. Who is the authority? Sorry? Okay, Inland Revenue Department. To collect the taxes, Inland Revenue Department is the authorized body. Other than that one, how the government can collect the funds? Customs, good, import duties and all the things. What else? Yes. Very good. Investments, right? Investment as well as sometimes you might heard that one, treasury bills and then the treasury bonds and all the things, right? So all these activities are handled by Central Bank of Sri Lanka. Taxes also coming to the central bank ultimately. And the central bank is the authority to handle these financial activities on behalf of the government, right? So mainly they are collecting the income from the taxes, direct taxes as well as indirect taxes, import duties and all the things. Other than that one, if they need funds, they are doing what? Issuing bonds as well as issuing bills, right? If you want to purchase the treasury bills or treasury bonds, you can go to the commercial bank. Each and every Thursday, they are giving the facility to the general public to purchase these treasury bonds as well as treasury bills issued by the Central Bank of Sri Lanka. These are the ways of how the government or how the country is collecting funds for what? Why they are collecting funds? Why Sri Lanka is collecting funds? Sri Lankan government is collecting funds. Why? To pay for the salaries of the government employees. What else? To make the general facilities for the general public. What else? For the maintenance of the government resources. Likewise, they have a lot of or as general public improvement, nation improvements. They have to utilize the collected funds. So the public finance is the approach managing the public's funds in the country's economy and development and growth of the nation, both domestically as well as internationally. It also affects every stakeholder of the country, whereas a citizen or not. Personal finance. Personal finance, again. Personal finance. You all might very keen in managing personal finance. You might have received at least 1 million, sorry, not 1 million, 100,000 salary. And then $128. Okay. Right? Personal finance. Do you have any insurance plans? Insurance plans? Good. Any other investments? You might have the investments, some of you might have the investments. So then sometime you might have some pension schemes or pension funds and all things. Anyone? Anyway, you are getting salary right now, no? Salaries, no? You all are permanent employees or somewhere else, no? So then salaries. Are you doing savings? Are you making savings for a 1 month? Good. If it is so good. How much of portion from your salary? 25. You are saving 25 per month from your earnings. Am I correct? No. You are not doing a job. 25 at least. We can't save 100%. Why? We have some utilities payments, no? Loans and other things, lease and all things. Anyway, you have to make at least 25% savings from your earnings, right? If it is so, you are good at personal finance, right? Personal finance means what? Managing individuals' financial activities. We call it as a what? Personal finance. All decisions taken by individuals, sometimes it might be householders as well, we categorize under the personal finance. Even you might have not. So we have you in future, once you become chartered accountants, you might have some wealth management. You have to pay for the credit cards. You have to pay for the insurance. You can purchase states and all the things. Then risk management, you have to pay the taxes. You have to budget. You have to budget your consultancy firms. And then social securities, you have to pay the taxes, and then loans, debts, and all the things you have to manage once after you reach up the 30 or 35. Okay. Entrepreneurial finance. Search entrepreneurial finance and write it down. Entrepreneurial finance. What do you mean by entrepreneurial finance? Entrepreneurial finance. Entrepreneurial finance. Yes, can someone tell me entrepreneurial finance? What is mean by entrepreneurial finance? Entrepreneurial means new. Entrepreneur means or else entrepreneurs means the persons who are doing the new things, right? Newly started business, right? Then finance means what? Collecting funds, right? So then entrepreneurial finance means how can we collect the funds for the new ventures? Very simple. How can we collect them or else managing the financial activities within where? Within the new ventures, we call them as one entrepreneurial finance, right? Entrepreneurial finance. As name implies, you can remember these, the core concepts, right? So then what are the, how can we collect the funds for these entrepreneurial finance? How can we collect the funds for these new ventures? So in nowadays, we have some venture capital organizations as well as there are some trending concepts like the angel investors. Sometime you might heard about the venture capital business. Have you heard the venture capital businesses? No, right. So venture capital business means they are a private limited company or the PLC company who is giving the funds for the newly open business with the intention of having the ownership of that company. Right? Part of the ownership should be transferred to the venture capital business. On behalf of that, they will give the funds for this newly open venture. Right? So that is a one way how the financial newly open business can make the funds. The other way is angel investors, right? If we have newly opened a business, we have trending ways to collect the funds. First one is we're collecting the funds from the venture capital businesses. Right? In venture capital business, what happens? They give fund us, right? In return, but they will tell us, okay, give the ownership or else give the entitlement of the company on behalf of the venture capital organization. That is the first thing. Second one is angel investors. Have you heard about the angel investors? No, angel means what? Angel. Angel investors means Surangana investors. ඒ වගේ තමයි concept එක, right? So there are some investors who are trying to give the funds for these newly open businesses without having any expectation, right? They do not need fund. They do not need entitlement of the company, but they have a small intention. What is that? They always try to give the guidance. They are professional guidance, consultancy service for the growth of that business. They expect that advantage or in return for their funds, right? So that is the difference between angel investors and then the venture capital organization, which are very trending in entrepreneurial financial methods. Angel investors again, they give funds that those are individual investors, right? That might be a private company also. That angel investor gives the fund for the newly open business, right? But in return, what they are expecting is not the entitlement of the company, but providing a consultancy service, right? You have to, the angel investor is expecting to give the consultancy service for the newly open business or the professional guidance for the newly open business. Advice then the advice then the company can go through advice then they expect funds for it. They have to give the funds in return, but they are expecting guidance for the long term. Clear? Entrepreneurial finance, actually, regarding the newly open business, we need funds. For what sort of activities they need funds? They have to open the system. They have to inculcate the newly QB or newly accounting software. They have to maintain the budgeting systems and loan things. So they need funds for these activities, right? So therefore, they have to anyhow acquire the funds. If it is not a PLC, they can't issue the shares to the general public. In that sense, they have to take the help of these venture capital organizations, angel investors, and so on. Okay. So we have discussed how many basic areas. So this is the mind map for the lessons. So regarding the business finance subjects, once after you write down the main topic, just my advice is keep the first page as it is for to draw the mind map of the lesson, right? So this is just to summarize what we have done. So far we have identified what is mean by finance, right? Finance. And then just now we finished the basic areas in finance. That is the second part of this lesson. First one, what is meant by finance? Second one, basic areas in finance, right? So accordingly, we have identified investments, we have identified the financial market, we have identified the public finance, international finance, and then entrepreneurial finance. Entrepreneurial finance. Yeah. So these are the 7 basic areas. But we were unable to discuss the corporate finance. Now I will explain about corporate finance. I will clear something. Okay? That is what? Personal finance. Personal finance. So this is the mind map of the lesson. 7th one, personal finance. Right? Always try to make this mind map. Right? Try to make this mind map for the lessons. So then we are very clear where we are right now. Right? So then I will discuss about the corporate finance also. Corporate finance means managing financial activities, right? Corporate finance means managing financial activities or make financial decisions. Managing financial activities for, right? Or made for decisions, right? Made for financial decisions. Made for financial decisions. Managing for financial decisions in corporations. In corporations. In corporations. Corporation means actually the PLCs. Managing financial activities within corporations or managing made for financial decisions in corporations we call as a corporate finance. It is specially concerned with PLC companies' financial activities. PLC companies' financial activities. Because rather than normal companies, that means private limited companies, as well as individual organizations' financial activities, corporation financial activities are having some sort of a differences. Why it is? Again, Shweta, managing financial activities / made for decisions in where? In corporations or PLCs, right? PLC. Public limited companies, we call it as one corporate finance. Right, corporate finance. We have 4 decisions actually. That is the next part of our lesson. So then we'll identify these 4 activities. Here we have 1, 2, 3, 4 activities. In very simply, what is meant by the corporate means PLC companies' financial activities. PLC companies' financial activities. Managing PLC companies' financial activities because if you take the help of the shareholders, right? If you take the help of the bond providers, definitely you might have a bigger role than the normal company's financial activities within the PLC, right? Why? Once you form a PLC, it is what? It is a legal entity, separate legal entity where it is similar to the one person. Right. So then if you are dealing with the one person's activities, you might have to face a lot of financial activities as well as broader financial activities than the normal companies or partnership than SME financial activities. Are you clear? Right. So you might get the broad picture regarding corporate finance once after you discuss the next part of the lesson. So therefore, next area, once after we completed the basic areas in finance, our next sub area is role of finance manager. Role of financial manager. Role of financial manager. Right. Now we are discussing what sort of activities the finance managers doing at the business, right? Doing it. Especially this is again regarding what? Regarding PLC. Regarding PLC. Finance manager, right? Just remember the picture we have started with. What is the picture? Sumudu. Right? Sumudu is what? Sumudu is what is her role? She is the CFO. Right? She is a CFO. Now the picture has been changed, so therefore we'll take Charit for the CFO, right? Okay, Charit. CFO. Again, Charit CFO is acting in between two parties or two the activities or two inside two the sides. The first one is the financial market, right? In the right hand side, we have financial markets, right? Financial market. The other side, as previously we identified, firm operations are there. This is inside, outside. What is the first activity? Just imagine you are going to form a business, right? You are going to form a business. This is our first year, right? This is our first year. Just we have started a business. If we have started a business, what should be the first step, right? If we form a PLC, just imagine Tarik is the CFO of JKH. John Keels Holdings, right? This is first year. This is an PLC. So then first year. If they have just started a business, right? They form a business. Do they have funds? No, they do not have funds. So therefore, first task is Charit need to collect the funds from where? Funds from the, very good, shareholders. They have to collect, they have to issue the shares, right? They have to issue the shares as well as collecting funds. Collecting funds. Right. When he is collecting funds, he has options. What is the first option? He can issue the shares, issue ordinary shares. Issue ordinary shares. Other than that one, he can issue the preference share. PS means preference share, OS means ordinary shares. When Charit is engaged in this issuing shares, he has to deal with the financial markets, right? He has to issue the shares within the financial market. Colombo Stock Exchange. Then, okay. These are coming under which category? These are which financial instruments? Debt or equity? Equity. Equity. E or equity. But regarding the preference share act as a hybrid mode because sometimes it will become the equity as well as the other time it again categorized under the debt instrument as well, right? Okay. Collecting funds. Second method is what? Charit can obtain what? Obtain a bank loan, right? Bank loan. Bank loan, or sometime Charit can, by company itself, they can issue what? Issue bonds and collect the funds or issue debentures and collect the funds. So then this is debentures or bonds. Bonds. Right. These three are coming under which category? Debt or equity? Taki. Debt or equity? Debt or equity. Loans, bank loans, and then the debentures, bonds are coming under debt or equity category. Debt category. Right. These are coming under debt instruments. D or debt. First activity done. Right? When Chari is collecting funds, right? Collecting funds, he has two sources. But those two sources are debt or equity. Using debt instruments or using equity instruments, he can collect the funds for the business. Are you clear on that one? Good. We call this one as in line with the financial manager's role, we can learn, right, 4 financial decisions in line with the role of financial manager. Financial manager's actual role is limited for the 4 financial activities, right? So therefore, role of the finance manager in line with handling 4 financial decisions. 4 financial decisions. Right, 4 financial decisions. First activity of the financial manager is, right, this side, financial managers. Financial managers activity. And this side, financial decision. Financial decision. Right. Financial managers' first activity is collecting funds. Collecting funds. When he is collecting funds, he can use 2 methods, debt and equity. Debt and equity methods. Raising funds or collecting funds, right? Via debt and equity, we have a special decision. We call that decision as what? Right? Capital, right? Can you see this one? Debt and equity, right? Linked with capital structure of the business, right? Debt and equity is the amount which determine the capital structure of the business, right? So then it is deal with first financial decision of a financial within a business, that is capital structure decision. Capital structure. Capital structure decision. Capital structure decision. Right? Capital structure decision. So then collecting funds means what? Capital structure decision. Capital structure decision. Once Charit collected funds, right? Collected funds, he have to utilize the collected funds in well in business operations. Right? In business operations. Then what are the business operations? Yes, business operations. මොනවාද business operations? Very good. Sales, right? Sales, we have to purchase the inventory first. Or we have to purchase the material first. And then if we have purchased material, convert it to the finished good. Right? Or else if you have purchased the finished good, you have to make the sales. Right? If you are making sales, what happened? If you are making sales, you might have the cash sales or the credit sales. Right? When you are purchasing the material, it might be credit purchase or cash purchase. You create suppliers, you create debtors, you create customers and all. Right? So that means debtor management is there, cash management is there. To these activities, you have to manage the finance manager need to manage the cash. How much of amount that we are going to utilize on purchase of material? We have to decide those things, right? Are we going to make short-term investments within 3 months investment, right? How we can decide the creditors policy, right? How we can decide the debtors payment policies. What these are daily activities, right? These are daily activities which needed to be handled by whom? Handled by the finance manager, right? Finance manager. And then while managing these activities, he might earn profit, right? He might earn profit. So therefore, second activity, right? Second activity of the financial manager is utilizing collected funds. Utilizing collected funds in business operations. Utilizing collected funds in business operations. In business operations. And thereby earn profit or gains. Utilizing collected funds in business operations and thereby earn profit or gains. What are actually the business operations, right? What are the business operations? Debtor management, right? Debtor management. MGT means management. Debtor management. Creditor management. Creditor management. Inventory management. Inventory management. And last one, cash management. Actually, these are in short run. Short run activities. Short run activities. Short run activities less than 12 months. 12 months. In line with this, handling daily operation, the second manager's activity, we have or else we name that management activity with the financial decision. So therefore, second one, utilizing the funds in business operations, debtor management DM, credit management CM, cash management CCM, cash management, and then inventory management IM. We categorize this decision as which decision? That is working capital management decision, right? This is the second decision, working capital management decision. Working capital management decision, we take the notation WCM. WCM. Working capital management. Working capital management. So therefore, second activity that is in line with working capital management. Working capital management decision, this is the first one, in line with the first activity. Second activity and second decision. Hope it is clear, right? Good. So then we'll go to the third one, right? Second and third activity in line with the working capital management. And then, now we earn profit, right? We have earned profit, or else we have excess money now. Why? We have effectively and efficiently managed the daily operations, right? If we have earned profit, just imagine the retained earnings, right? You have retained earnings and then retained earnings. We have now retained earnings, right? If we have retained earnings, right? Just think about the statement of financial position. You have retained earnings. What should be the next decision? PBT. PBT, and then you charge the tax, and then you come up with the PAT, profit after tax. Right? If you are a PSC company, right? So before charging your all profit after tax, you have to prepare the equity statement. Right? When you are preparing the equity statement, you have to give something to your share providers or the fund providers, right? Shareholders. We call that one as what? Dividend, right? Part of the profit, part of the PAT should be allocated to whom? To your fund providers, right? The fund providers. If it is a preference shareholder, the preference share dividend is compulsory or not? Preference share dividend, as you remember, compulsory or not? That is fixed, right? That means if you have acquired funds, right? If you have acquired funds via the preference shares, you have to give what? You have to give the dividends. Right? That is a compulsory. And if you have acquired the funds for the ordinary share, if you have retained earnings and the board of management, board of directors decided the dividend, you have to disclose the dividend. Right? You have to disclose the dividend. So then 4B is what? Right? For if the retained earnings is there, you have to give the dividend. That means distribute. Right? 4B, that is distribute. Distribute dividends. Distribute dividends to existing shareholders. Distributing dividends to the existing shareholders if company if company has retained earnings or profit. Or profit. Shareholders are within the financial markets, right? That is why the arrow is in line to the from the finance manager to the financial markets. So then activity 4B, this is 2 and 3, this is 4B, right? Distributing dividends. We call this decision as which decision? Dividend decision. 4B or the fourth activity. Don't take it as 4B. Even the activity is 4B, decision is 4. That is dividends. Dividend decision. Dividend decision. Dividend decision. This is one. This is fourth decision. Fourth decision, dividend decision. Fourth decision, dividend decision. Once after we distributed, right? Once after we have retained earnings, right? So now think we have 1 million share, 1 million profit, and then 100 million distributed as a profit. Sorry, distributed as a dividend. How much remaining? 900,000. That 900,000, not entirely 900,000, but if the company has a new opportunities, right? Sometime it might be in the real assets or sometime it might be in the financial assets. If the company is having excess money and then if they have the chances, what they can do is they can go to the new investments. Right? Rather than keeping funds within the business as retained earnings, part of that retained earning can be utilized in obtaining new assets, obtaining new shares, making an investments. So therefore, we identified activity 4B, making the investment, right? Activities like 4A, sorry, the activity 4A, making, right? Making investments, please write it down, making investments in, write it down please, making investments, I don't have the space to write it here, making investments in financial assets, making investments in financial assets or real assets if company has excess retained earnings / profits / profit for the growth of the business. For the growth of the business. So now, in making these decisions, right? In making this decision, so we have another financial decision. When we are engaging with these 4A activities, 4A activities means investment, right? Investing funds. Investing funds in real assets, RA, real assets or financial assets. FA, financial assets. We call this decision as which decision? Investment. Investment. Investment decision. Investment decision or capital budgeting decision. Capital budgeting decision. Capital budgeting decision. Capital budgeting decision. Collecting funds, capital structure decision. Utilizing funds in business operation, working capital management decision. And then investment in funds in real assets or the financial assets. We call it as an investment decision or the capital budgeting decision. And last decision, distributing dividend for the existing shareholders, that is dividend decision. Dividend decision. So we have two more to discuss. Agency and stakeholder theory, as well as the other one, the main objective of the financial management. We'll discuss those two in next week. Any questions so far? Are you clear on what we have discussed? Okay, so these are the financial decisions. This is the explanation regarding what we have discussed. You can refer the note. This is the activity. Please do the activity at home and then complete the activity and come to the next week. Are you clear? Good. For which days you have online lectures for the auditing as well as the business communication? 18 schools. Takir. For which days you have online lectures? Yes, you can scan your QR, please. Because I missed today's evening lecture, that's why I have to this additional one. Is it working? QR is working. It's working. It is currently. The work, yeah, search. Hope now it is okay. Please mention that you. Is it working now? Good. Okay, so then you have marked the attendance, you can leave. Thank you very much for your participation. Have a great day.
This one. Yes.
Online students, online students, can you hear me?